John, you have tattooed to your brain the bond market's always out in front of the equity markets. What have inversion occurrences signal to U.S. equity investors?
I would have put up a slightly different chart. If you
Please.
do GC on Bloomberg, which is basically what the yield curve looks like, and the curve has been inverted now for quite a while. Take a look at that green line where it is now compared to 6 months ago. The curve is severely inverted between Fed funds and all the way out to 5 years. This is not a new story. This is the reason why, and you know, for the last 6 years, I've been a raging bull. I've told investors not to be buying into this because until the Fed fixes this part of the curve, and yes,
okay, I'm going to cut to the choice, and I don't want to take James Sweeney's job. I mean, I don't want you to speak for Mr. Sweeney, who I'm sure is watching right now. Is this a moment where the Fed, the Bank of England can't do it? They can't step in with Brexit. Does the Fed have to come in with an emergency rate cut to get out front of the many political and financial events of this August?
First of all, I don't think this is a news flow issue because this was before Trump tweeted. We had a curve which looked like this. But the Fed needs to show that they get religion on this. That this is not about. If they look at incoming data, we don't have an inflation problem.
But do they get religion with a rate cut before the scheduled meeting?
No, they're not going to do that. But if they don't get religion and start to say, by the way, Tom, they don't need a meeting. What they need to do is to start talk about this and say, listen, we're listening to the market. You know, we were all taught don't fight the Fed. The Fed needs to understand that they can't fight the market, and if the curve is inverted at short end because they're holding the Fed funds rate too high, it's not going to be healthy for stocks, and stocks are not going to turn around until this picture changes right on your screen.
All right, Jonathan, if the inverted yield curve continues inverting, right, is there a worry that there's a feedback loop that actually markets freak out and therefore we have a recession? Yeah,
and I think, Francois, it's even simpler. And let's give two examples. If you're a bank and you're borrowing money overnight or 1 month or something, you're borrowing it more expensive than you're lending it out for 4 years. Why would a bank want to lend money at a loss? Or look at an individual who may want to, as they roll over their bond portfolio, decide to leave it in a 1-month bank CD instead of going and investing in a muni bond for 4 years. And that means that when you have a curve inverted the way this is, it drains liquidity out of the market. So yes, the animal spirits will naturally move if the Fed doesn't indicate they're going to do something different. It's also why the futures market is saying that the Fed's going to do something. It's not that they just simply want, it's not like a child wanting candy. They realize that the only rational thing for the Fed to do here is to put the curve in a slightly different place.
Okay, but is there a risk that if there's a race to the bottom, like these currency wars actually end up with monetary policy wars?
Well, to your point, if this picture doesn't change, it will start to basically increase the recessionary risk to the broad system. It'll affect asset values. It'll affect business behavior.
Okay, I want to go back to Don't Fight the Fed. The great Martin Zweig, we lost him in 2013. He was absolutely brilliant. Marty Zweig would say, don't fight the Fed. Why does the Fed have to fight the markets?
Because, well, the market right here is telling you that the Fed funds rate is too high. What they're basically saying is...
What's the Fed afraid of? What is Vice Chairman Clarida and Chairman Powell afraid of
what they're afraid
if the market indicates
I guess they're afraid of that you have a tight labor market and we're going to wake up tomorrow and inflation's going to be running away and they're going to be stimulating at the wrong end.
Does James Sweeney believe that?
I don't think so. I think that he believes that there's an inflation impulse that we may be underestimating. But right now, it's not. I mean, listen, if you're simply looking at that growth in inflation data and you were the Fed, you would do nothing. If you're looking at the curve, you'd be jumping all over it. It's a real conundrum.